And with that, I'd like to welcome Alex Morsink from Equivesto. How you doing, Alex?
I'm doing great, Craig. Thanks for having me.
I've been enjoying these crowdfunding sessions. I've been learning a lot, and now we're doing a session on what we don't know about equity crowdfunding. So this is going to be a lot of different information coming at us, and hopefully we're going to get a lot of interaction and questions in the chat and Q&A window.
So let's just dive right into things you might not know about equity crowdfunding. So we're going to cover 10 topics, which I've sort of outlined here. The first one is the stages that your company can be in to raise from equity crowdfunding, why raising via equity crowdfunding might be useful even if you don't need capital, some interesting facts about protection for investors, a little bit about how complex the Canadian investment rules are for equity crowdfunding, some information about platforms. Are they registered? Are they not? How your raise amount actually affects the reporting. It's not, one size fits all. So we'll talk about that. Where do investors come from? Do they grow in the ground? Who knows? Find out in a couple of minutes. And what is the most important stage for your campaign success during the whole all the process of start to finish? Which one is the most important to guarantee your campaign success? When do people invest? What time of the day? No. What time in the cycle do they invest? And how you can help your investors do more for your business beyond just investing. So what stage is best for equity crowdfunding? So equity crowdfunding, because it's controlled by some rules, in Canada, it's set by rules of each province. We'll talk about that in a little bit. The most you can raise through equity crowdfunding in Canada is actually $1.5 million. You can raise as little as $25,000, but the maximum is $1.5 million. So based on that, that sort of shows you what stage your company should be in to potentially raise through equity crowdfunding. You're looking at something from pre-seed all the way to a Series A. Sort of post friends and family, but it's comparable to when you go out for angel funding or even before going out for angel investor funding. Companies can be pre-revenue and raise successfully through equity crowdfunding. What's most important is not actually the stage of the business, but it's the time, the effort, and potentially some of the capital dedicated to preparing and running a really effective campaign. Companies can be both startups and small businesses, so you can sort of come from any industry to raise with equity crowdfunding. But some of the most successful companies have some sort of attraction or draw relating to the general public, and you have really clear company goals and objectives. You also need to have at least a demo version of your product or service, or you can have existing traction, proof of success to raise through equity crowdfunding. So the next, why would you want to raise capital from equity crowdfunding if you don't even need the money? So equity crowdfunding is a really amazing tool that allows the general public to invest in a private business. Without equity crowdfunding, it's not legal for regular people to invest in your business until your business gets big enough to eventually go public. So with equity crowdfunding, it's a great way to let your community, your followers, your most loyal customers actually become a part of your business. So for some businesses, even if the business is doing successful and doesn't need to raise the capital, it's a great opportunity to almost give back to those individuals in your community who have helped really drive your success and give them a chance to share in that continued success. So it's great as a reward, and it creates opportunities for new advocacy and reach, as you can take these individuals who are already excited about what your business is doing and give them even further agency and potential to really go out and sort of spread the word about how great you are. So that's actually a useful thing to think about. Most people think, okay, people using equity crowdfunding are just going there because they really need to raise capital and they haven't been able to, get it from an angel or a VC. It's actually a great way to think about if, maybe your company's in a growth stage, but you want to, really reward and support those individuals who have been helping your company get to the stage it's at now, your first customers, your first suppliers, and your sort of extended friends and family network. You can reward them and let them invest with equity crowdfunding. So what are some surprise protections for investors? So most people don't actually realize, but with equity crowdfunding, there's some rules that are put in place to protect all investors. So anyone who invests with equity crowdfunding automatically gets a 48-hour backout window. So you don't get this anywhere else. Normally, you buy an investment, it's done. It's in. If you want your money out, you have to find a way to sell it. And if you can't sell it, well, sucks to be you. But with equity crowdfunding, there's a special rule that gives you a 48-hour window to change your mind, get a refund, no questions asked. So if you invest and you're excited and, you take a few minutes to think about it, you go for a long walk outside and you realize, this isn't for me, I made the wrong choice, you can have a full refund for free within that 48-hour window. Also, it's not mentioned on the slide, but another important protection for investors is with equity crowdfunding, companies set a minimum raise goal. If companies aren't successful in raising enough money to hit the minimum raise goal, all of the funds that they've raised up to that point when the round ends is actually refunded to the investors. So if there's a company that's just starting out their raise and you're interested in participating, but you're a little bit nervous because they might have only raised, 5 or 10,000 so far and they're not at their goal yet, that's okay. You're still protected. You can put your money in, and even if they don't hit that minimum raise target, it doesn't mean that suddenly they're going to get only $5,000, but the company won't have the money they need to succeed. If they don't get that minimum goal, all the funds are refunded back to the investors. So the next topic, Canadian rules are complex, very complex. So unlike the US and the UK, where there's one government body called the securities regulator that controls the entire country. So in the United States, it's the SEC, the Securities and Exchange Commission. They control everything to do with stocks, bonds, any sort of investment securities they're in charge of. In Canada, there's a separate securities regulator for each province. So what that means is the rules for equity crowdfunding can potentially be different in each province, and it isn't even necessarily legal in every province. Newfoundland, for example, doesn't allow equity crowdfunding. And so when you're thinking about trying to go out and raise capital with equity crowdfunding, it's not just, okay, as a company, what sort of reporting am I going to need to meet? Where am I as the company raising capital? Where am I incorporated? It's not actually about that. It's about where do your investors live and where do you want to bring those investors in from? So for example, if you're an Ontario business and you want to raise capital from investors in Ontario, but also Alberta and BC and Saskatchewan, you need to meet the requirements of each set of rules in every province. So if one province doesn't allow equity crowdfunding, you can't accept investment from investors who are living there. And if equity crowdfunding is allowed in BC and allowed in Ontario, but the rules are different, you have to meet the requirements of both set of rules separately for each province. So it's rather complicated. So even within one province, so let's say we're just looking at Ontario, equity crowdfunding isn't actually one single set of rules. So if you think about raising capital, the government actually creates sort of legal doorways called prospectus exemptions that are what enables you to raise capital. So even if you're just a small business and you go out and you're getting your brother-in-law to invest in your business right when you're starting, technically that's going through a legal doorway that the government has created that lets you raise capital. That doorway requires no filings and no paperwork, so most people pass through it without even knowing, but there are multiple doorways, many other doorways as well. So equity crowdfunding is not just one single doorway called equity crowdfunding. There's actually 3 different sets of doors in Ontario alone that fall under what we as the general public would call equity crowdfunding, maybe even 4, depending on how you think about it. So even in that situation, you as a business working with a platform need to pick which door you want to go through, because each door has a different set of rules and requirements. So it can be rather complex trying to figure out which set of rules you want to follow, whether you want to try to meet multiple, especially when you add in other provinces. It can get very complicated in Canada, which is why there are platforms to make it much simpler for you. Another thing to note with all these rules and everything, it's probably clear at this point, but you can't raise capital from multiple countries, investors in multiple countries, through one campaign. You as a business could potentially raise capital from investors in multiple countries, but you would need to, if you were using equity crowdfunding, for example, you would need to actually create a separate equity crowdfunding campaign in that country with a different platform from Equivesto to raise capital from those investors. And then in Canada, you would have to work with Equivesto to raise capital from the Canadian investors. And so you'd have to have 2 campaigns at the same time. It's not possible to have one campaign and then everyone from the whole world can just invest through that one campaign and that one website. It works for things like Kickstarter and Indiegogo because they're taking donations. They're giving you money essentially for potentially nothing in return, or to pre-order a product or something. As soon as you add in the fact that they're actually buying securities, because securities are regulated and they're regulated differently in every single country, it's very complicated to try to have many investors come through one platform, because that platform would have to be licensed and meet the rule requirements of every single country that you would want to raise capital from. So no platform has that complexity at this point. So you'd need to work with separate platforms in every country. So no US investors, sadly. Okay, I keep talking about platforms and registered, but what does that actually even mean? So companies need to work with a registered platform to raise capital through equity crowdfunding. So there's a variety of different ways for platforms to get registered with different labels, but essentially, because this is involving securities and there is legislation and rules that need to be followed, every platform that's helping companies raise money through equity crowdfunding needs to be registered in some way. So if you're talking to someone and they're saying they're going to help you raise capital, and they're going to do equity crowdfunding, make sure to talk to them and confirm that they are registered. You can actually look up their registration at www.aretheyregistered.ca, and you can actually see if a company is registered with one of the securities regulators and has a license. There's a lot of legal requirements around equity crowdfunding, and what needs to be checked from the investors and what needs to be checked from the company and what documentation has to be filed. So make sure, if you want to do this, that you're working with a registered platform, so that 1, you meet all the requirements, and 2, the actual transaction and investment is legal. So just make sure of that. What else might you not know about equity crowdfunding? So it's not so simple, as I mentioned, with single set of rules that all raises through equity crowdfunding in Canada are the same. Depending on the amount of money you raise, there's different reporting requirements. So essentially, if you raise up to $250,000 twice a year, you don't have any reporting requirements. This is the easiest because it's the smallest amount of capital. If you raise up to 1.5 million per year, you actually have to get accountant prepared financial statements. So you have to pay an accountant to review your financial books and create an annual statement, and you have to do that ongoing in the future. If you want to raise over 1.5 million, there's considerably more paperwork involved, and you actually need audited financial statements, which can cost up to $10,000. Actually, more like starting at $10,000 can cost up to, depending on how big your company is, hundreds of thousands of dollars per year. That's the most intense. So most companies starting out, they probably want to do equity crowdfunding for the $250,000 limit so you can avoid those reporting requirements. What else might you not know? The importance of your community and building a community prior to running a campaign. So no matter what information is presented by a platform as part of their marketing and trying to convince you to sign up with them, in reality, the vast majority of companies that raise successfully on equity crowdfunding platforms are successful because they have spent the time and effort to build up and prepare their own communities prior to launching their campaign. With equity crowdfunding, as soon as you're doing something relating to the general public, it changes from, sort of a traditional, the way you'd think about going to an angel investor or a VC. It's no longer just about making sure you've got a fantastic business plan and your business is well structured and seems like a great opportunity to invest in. Suddenly that still matters, but the amount that matters is a little bit less. It's become now how to manage groups of individuals, get them excited, and bring them to the place where you need them to do whatever it is that you want them to do. In this case, read about and understand your business and potentially invest. It becomes more about managing a crowd, attracting a crowd, building a crowd, that sort of marketing strategy, than about simply crafting a really fantastic business plan and creating a strong business idea. So many platforms post high numbers of their user base. We've got 10,000, 15,000 investors on our website. That is fantastic. And that's great that they have that. And we want more and more investors to sign up to any platform. You can sign up for mine. You can sign up for, any platform. There's lots of great deals out there. However, even if there's 10,000 investors on a platform, there's no guarantee that those investors will invest in your deal. If the average deal investment is between $500 and $700, and you're trying to raise $500,000, for example, from that, it's clear that you're going to need 1,000 investors to invest that $500 to reach your goal of 500,000. And if you look at platforms and engagement and involvement, usually only about 1% of the investors on a platform will choose to invest in your specific deal, maybe even less. Sometimes it's 0.5% or less than that, the more and more you grow. If you think about it that way, even if they have 10,000 investors, only about 100 of them are actually going to participate in your deal, which is nowhere near enough to hit that target of the 500,000. So to ensure you have a successful campaign, companies really need to focus on building their own community and then converting those communities into potential investors when you launch the campaign. So any involvement that comes from the platform and the investors already on the platform should almost be thought of as a bonus. If we talk about Equivesto specifically, we provide a lot of advice and instruction around how to build that marketing strategy and implement it prior to your campaign even starting. It is quite a lot of work though. So if businesses decide that that's too much work for them and they're not marketing experts, there are equity crowdfunding marketing companies that you can hire and we can refer them to you. But of course they do cost money. Why isn't this something that Equivesto can do ourselves for you? We provide all of the instruction and the advice. However, to actually go and implement that needs the creation of all sorts of specific marketing materials and elements that we as a sort of licensed third party can't go and create for one company over another. We have to treat every company fairly and equally as per our legal requirements. And so we can't have a situation where we're doing that for one or the other. And if we did it for everyone, we'd have to increase our fees from where they are now to maybe, $20,000 or $50,000 to cover all the costs of doing that. So it's much easier for us to try to provide for free all of the advice and instructions and tips about how to go and do this. but we can't do it for you. When you're thinking about who are these people that you're going to start reaching out to and potentially turning into this network of early investors, they could be close peers, customers, followers, suppliers, your extended social media network, anyone that you know, but they could also be people that you've never met before. You can leverage the power of social media and marketing to really grow and expand your community beyond just who you immediately know. And that's something that can really help make your campaign more successful. But it's really important that companies know that, unless a platform has well over 1 million investors, you still want to make sure that you take the time and the effort to really build up your own campaign before raising a round with equity crowdfunding. When is the most important stage to ensure your campaign success? As I'm sure you can surmise from what I was just saying, that most important stage is actually before the campaign begins. You want to make sure you spend time building and preparing that community so that they really engage and participate right away on day one. Having that initial immediate success and that interest right away is really critical to make sure that your campaign is successful and you reach your goal. So we really recommend spending a few months prior to the campaign preparing and executing a pre-campaign marketing strategy. We provide, as I mentioned, all these sort of tips and information about how to do this. So you should probably spend about 1 month preparing your strategy and 1 month executing your strategy to really build and capture that tight group of interested individuals who will then convert to be investors right when your campaign launches. That's really quite critical. You also want to make sure you spend the time to build the hype leading up to the launch of the campaign to help those people convert right away when it goes live. Suddenly, investing in your business is a little bit more like marketing a product or service to the general public and getting them ready for, a really exciting product launch. But instead of a product, it's your whole business. Also, if businesses are interested, Equivesto can actually keep the campaign private for that initial period, and you can have individuals invest quietly until you hit that $10% of your goal, and then we can release that to the entire platform, which further helps demonstrate traction for your deal. Why is there so much emphasis put on really getting that excited group investing at the beginning of the campaign? And when do people actually invest? So campaign activity and investment is a U shape. So when at the beginning of the campaign, there's a lot of interest, people are excited, they're investing. During the campaign, there's a little bit of a lull. There's not necessarily a lot going on. This is when you try to add additional news or exciting updates, but it's usually a bit of a lull down here in the middle of the U. And then near the end, right when your campaign is about to close, there's another spike of people rushing to invest right before the end. With this in mind, it's really important to have some strong traction at the beginning by building up that interest prior to the campaign starts so that you can make large progress towards your goal at the beginning of that U. And you want to try to create events and time updates in the middle so you can still drive some consistent investment before coming to the end of the campaign with the other side of the U. It's really important to plan that all out, and Equivesto helps plan out the marketing strategy for that as well. Okay, it's a ton of work, it sounds like, all of a sudden, to go and do all of this. And now you've got all these people at the end. Why do you even want all these investors? Well, having hundreds or thousands of investors, it does potentially sound like a lot of work, but it can be a massive benefit for your business at the other side. So you've done all this work to build this whole marketing strategy and everything, and you've done all this work to get all these hundreds of investors. Not only does this marketing strategy become extremely useful and valuable going forward with marketing any products or releases or updates that you're going to have, because you have all these skills and this entire marketing apparatus built. But also having thousands of investors, not only did you raise the capital that you needed from these investors to get to your next goal, but also these thousands of investors can be easily converted into company spokespeople and salespeople. Suddenly, you've got essentially a grassroots network of individuals who are excited and hyped about your business. If properly educated and updated, these people can quietly spread the word about what you're doing, help convince other people to sign up and use your product, and spread the word just about your company in general. And it needs just a small amount of time and effort to keep these people engaged, keep them updated, and they'll help you be more successful in the future. So you go to all this effort to really build an excited and involved community. Why not use that after the campaign is done and continue to grow and build that really tight group of individuals around your business? If we look at the future of business today and what helps make companies successful, it's not about having 10,000 customers who don't really care about your business at all, but it's about having 1,000 customers who care so much about what you're doing. And that word of mouth transmission of ideas is so much more valuable when everyone's just being bombarded left, right, and center with social media ads. Having a friend say, hey, I really recommend this. I use this, I invested in this company. They're absolutely fantastic. That'll go, an extra 10 steps in convincing that person to try out your product or service. So those are 10 things you might not know about equity crowdfunding from the perspective of an entrepreneur. Thank you for watching, and I'm happy to answer any and all of your questions.
Thanks, Alex. We got a bunch of good questions here in the chat room, but I'd like to start with one of my own. Early on, you said something that was, I definitely did not know about equity crowdfunding. Being half Newfie, why can't Newfoundlanders equity crowdfund?
Yeah, so that's a great question. So as I mentioned, each securities regulator sets their own rules about equity crowdfunding. And so those rules can potentially change anytime. They're set by this government regulatory body. In Ontario, it's called the Ontario Securities Commission. In Newfoundland, I believe it's called Securities NL. And essentially, they just have chosen to not create a set of rules to allow equity crowdfunding. And the existing rules essentially say you're not allowed to get investment from the general public. So you can call Securities NL and ask them.
All right, I will. So the first question here is probably obvious, but can startups raise funding this way too?
Yes. So equity crowdfunding is fantastic for both startups and small businesses. Two of the companies currently raising funds right now on Equivesto are startups. Startups really are a great fit for equity crowdfunding because you've got something new, you've got something innovative, you're really trying to get that capital to grow rapidly. That fits well with this. Also, because you're doing something new and innovative, it's a great opportunity to grow and build your community and get them excited about your vision so that, if you've just launched or you'll be launching your product soon or your service soon, you can use this to get people involved, get people knowing about your product, and tie this with your initial product launch marketing.
Great. What kind of costs are involved in an equity crowdfunding round?
Right. So there's definitely a lot of costs involved depending on the amount you want to raise, and the costs do scale with the amount. But as I noted on the earlier slide, the minimum amount that you can raise for equity crowdfunding on Equivesto is $25,000. That's the smallest amount. There's basically costs in three general areas associated with crowdfunding. So the first is the cost for the platform, which is maybe the most obvious. We charge fees to do this and everything, and our fees cover the cost of doing the full due diligence on your business, confirming your identity, confirming that your business is legal and licensed and operated, reviewing your legal structure to make sure that you have the right documentation in place to actually issue securities and that people have the right rights and protections as shareholders. Then it's looking at okay, what valuation have you set for your business? Does that make sense? Or review of your business plan, pitch deck to make sure that your business is viable. And that's something we want to offer to the general public. And then actually structuring the offering, helping you prepare the campaign page, and then running the campaign, doing the transactions, and helping you prepare the closing documentation at the end. Also, on the investor side, we review all of the investors, confirm their identity, do criminal background checks, and also we're legally required to review their financial and personal situation to make sure they understand the risks of investing in these high-risk businesses, and that they and what they're looking for and their financial goals are a fit with these high-risk business investments. So that's what the platform does. Another area of expense is legal fees. So even though we do a lot of work to try to minimize the expenses and legal expenses involved with doing this whole thing, we provide free legal templates, all sorts of other stuff, you're still going to need, a company is still going to need its own legal representation to review all the important legal documentation that will be signed and to give you, the founders, the right legal advice you need. So you're still going to have to pay for your own lawyers separate from this. And then, of course, the marketing. So even though we provide instruction and advice around how to do this, and technically you could do this spending no money on marketing, you'll probably want to budget between $1,000 and $5,000 for marketing for the campaign. However, the marketing for the campaign can also double up with potentially launching a new product or just general brand awareness and brand marketing. So it's not, it doesn't have a singular one-time value. It provides ongoing brand value. But given those things, you probably want to be raising, the minimum is 25,000. So you probably want to make sure you're raising at least that minimum for it to be useful. But again, many companies aim for the maximum legal amount, which is $250,000 twice a year in that lower, not as much regulation area. If you want to raise even more than that, then you add on the additional cost of the accounting fees, because you now have to pay an accountant to prepare all of that documentation that's required by the government.
If people want to find out more about you and Equivesto, where do they go?
Yeah, so they can check us out at Equivesto on Instagram, Twitter, Facebook. You can head to equivesto.com/learn. We've got an entire learning center for both companies and investors to learn about the entire process. Or you can reach out on the website or Instagram, Facebook, LinkedIn, Twitter, wherever you want. We're on TikTok too.
Great. Thanks again for taking the time today. It looks like we have one slot left for Friday, so if you're interested, jump in. Thanks again, and we'll talk to you soon, Alex.
Thanks, Craig. Thanks, everyone.